Hurricane Helene caused an estimated $250 billion, and that's before an even bigger hurricane, Milton, made landfall last week, which is estimated to cause around $175 billion more of damage. And a lot of that damage is in the form of real estate. It's estimated that Hurricane Helene alone caused around $50 billion of direct damage to real estate. And guess what? All of those massive insurance companies that issue insurance policies to all of us, they're gonna want their money back. And guess who they're gonna want their money back from? You. And they're not going to care if you even live in Florida to begin with. They're also not going to care if you even own a home or not. Let me explain. You see, these insurance companies operate as sort of an umbrella, not just issuing one type of insurance and not just operating in one specific area. No, these insurance companies handle insurance across many different states, if not many different countries, which means that the same insurance provider that issues your home insurance probably has exposure in Florida. And not only that, they don't just handle property insurance, but also handle car insurance, commercial insurance, renter's insurance, and many other types. And that means that if you don't even own a home in the first place, your car insurance provider or your renter's insurance provider or your commercial insurance provider probably has exposure in Florida. And you know what that means? That means that you have exposure to Florida, even if you don't live there and even if it's not the same type of insurance. And all of this means that when insurance companies look at their bottom line revenue, if one branch or area of the business is losing money, they will look to the other branches or other areas to carry that weight. And what this means for you is that even if you do not live in a disaster-prone area, you can with almost 100% certainty expect your insurance premiums to skyrocket. And even if you don't own a home to begin with, you can still expect an attempt from your insurance companies to try and raise your car insurance premiums, your renter's insurance premiums, or any other type of insurance premium that you probably use to make up for the massive payouts that they're going to have to pay this year due to Hurricane Helene and Hurricane Milton. And not to mention other disasters like the destructive California wildfires that seem to happen every single year and are getting progressively worse. And I'm sure you're saying, well, my insurance already went up 10 or 20% this year. That is definitely the case, but I want to be very clear with you because this is important. That is just the beginning. You're going to continue to see increasing insurance costs year after year. Now, let's go over the data and some examples so you can see the severity of the situation. As of August of this year, the United States alone has experienced 19 individual natural disasters that have each at least cost $1 billion or more in damages. That's a rate of more than 2 every single month. And we're in October now and hurricane season is upon us, so that number will only go up. Now in Florida, there are hurricanes, but in California, there are wildfires. And yes, the same insurance company that issues your policy most likely not only operates in Florida, but in the mountainous regions of California as well. Which means that even if you don't live in those areas, you not only have financial exposure to hurricanes, but to wildfires as well, simply by association. For just 2024, the line fire, the bridge fire, and the airport fire has burned hundreds of thousands of acres in California alone. Here's some more statistics for you. In 2018, the Camp Fire, the deadliest and most destructive wildfire in California history, plus the other wildfires that year, caused over $13 billion in insured losses. Another example, in 2020, insurance companies lost over $8 billion to California wildfires. And in 2021, during that California fire season, an estimated over 3,000 structures were destroyed. And look at this, I have another stat for you. The U.S. Joint Economic Committee estimates that climate change-fueled wildfires cost the U.S. economy up to $893 billion annually almost $1 trillion. Now, not all of that, of course, is insured real estate, but the number is still insane to fathom. And on top of all of that, when you look at the top 10 largest wildfires in California history, they have all been in the last 20 years. And the largest 5 have all been since 2018, which means that the wildfires are getting bigger and the losses from them will only get worse. And all of that means that home insurance premiums will only get worse, even for you, even if you don't live in California or Florida. And the kicker, all of that is before we even begin to discuss the increasing average cost of a new vehicle and the seriously expensive cost to repair electric vehicles, which by government mandate will only become more common on the road. The average new car is now over $48,000. In 2014, just 10 years ago, it was just barely over $32,000. And electric vehicles, well, not only are those on average more expensive to buy, while in general they are more easy to maintain than internal combustion engine vehicles, their major flaw is that almost any damage to the battery directly results in a total loss of the vehicle because of its complexity. And even if it doesn't result in a total loss, a battery replacement for an EV can range anywhere from $4,000 to upwards of 20 grand. And yes, once again, these seemingly unrelated things, car prices and natural disasters, will absolutely affect you because your insurance provider's payouts to clients will undoubtedly increase because of this. Basically, if more money is exiting the business, what's the only way to maintain massive profitability? Of course, by increasing the money entering the business, which comes from insurance premiums. Now, I just said that insurance companies are enjoying massive profitability. What do I mean by that? Well, for example, in 2023, insurance companies made over $88 billion in profit, which guess what? Is more than twice as much as 2022. And in the first quarter alone of 2024, insurance companies made over $39 billion in profit, which means that they are on pace to break their record again, which was just set a year ago in 2023. Another example, Progressive's net income for 2023 was over $3.9 billion, which is more than 4 times as much as 2022. And as we can see by the natural disasters and increasing vehicle costs, this profitability is absolutely not fueled by just a lucky couple of years with less payouts. No, this profitability is absolutely fueled by insurance companies sticking it to you by increasing premiums under the excuse of having to pay out more because of natural disasters. Doesn't that sound familiar? Not so different from corporations increasing prices to fuel record profits under the excuse that their costs are going up because of increased inflation.